Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and I'd like to discuss your options if you receive a Form 1099-C for cancellation of debt. If you borrow money, you receive the proceeds of the loan tax-free. When you repay the principal of the loan, you receive no tax benefit. If the lender cancels or forgives the debt, your net worth has increased. As a result of this increase in wealth, you must report the canceled debt as income on your tax return and pay income tax on it. This is a very unfavorable provision in the law, since you're required to pay tax on money you received in some cases a long time ago, or that has been tied up in an asset like a house or an education that can't be sold to satisfy the debt. On the screen you have an example of a Form 1099-C. As you can see, it lists the creditor or lender, the debtor, that would be you, the date that the debt was canceled, the amount that was canceled, this is what would end up on your return as income, a description of the debt, for example, credit card debt, student loan debt, etc., and the fair market value of the property, if any. So what are your options? One option is to simply pay the income tax on the forgiven debt. Another option is to exclude the cancellation of debt income under one of the provisions on the screen. If the debt being canceled is related to a foreclosure on your personal residence, and the original loan was taken out to either buy or construct the house, so in other words, this isn't a home equity loan that you use to pay off credit card debt, then you can exclude that debt forgiveness. Similarly, you could exclude it if it's related to a qualified farm. Student loan debt that gets forgiven by teachers is excluded. And you also don't have to pay taxes on it if you are insolvent or bankrupt. Insolvency in this case means that on the date that the debt is canceled, your assets, in other words, what you own, are less than what you owe to your creditors. In other words, you're underwater. If the assets are used for business purposes, the loan is on assets, you could opt to make a basis adjustment and reduce your basis in the assets rather than report it as income, which simply defers reporting the income until the future time when you sell the assets. And last but not least, you could treat the cancellation of debt as a gift. This would only apply in situations where the lender is willing to treat that as a gift, because that transfers taxability from you onto them. For more information about cancellation of debt income issues, call the tax experts at AA Accounting. We're here year-round to assist you. Call us today to set up an appointment to discuss your tax situation. We can help.